All right, mate. Yeah, reverse knife catching on Sol. You open a small short. Let's have a look at it. So you can see, if you remember, my target for Sol was 94% drop, which was the same drop as Ethereum in the last bear market. Now, I didn't buy it. I did not buy it because of the news, because of the FTX collapse down here. I actually bought some in here and traded in here, but it was, that was too early, obviously. But, my prediction was 94% drop, and well, I don't know where we went actually. What was the final drop? It's just interesting to know these things. 97% down. Oh my god, that is. I'll be kicking myself now if that is the low. Oh, I can't believe I don't even have an alarm down there. I just added a load the boat alarm down at the all-time lows down there. So anyway, if FTX is opening again, I don't think we will see those lows. I think the bottom is probably in. But anyway, who knows? I like your attempt at a short here. It's a tricky one. Now, I always do say it can be safer selling into the red candle. For here, for example, you can see in the past there's been 2 days up, and then the third day where the stop hunt's up there is the drop. Okay, so that's safer on the new red day. There's been 3 candles here. It is a reverse knife catch, and I know what you're saying. There's 3 candles up here. Like, even this forms the same similar candle of what we're forming today. You can see here, and in the bullish market it gets the third day higher, which still getting over that chest infection. But you can see here, the third day is what it's a short squeeze, because people are trying to short this and it gets a short squeeze higher. Okay, that's what you need to be careful of. That's what you need to be worried about in case there's that third day short squeeze. So that's why I do often like to trade and not short the green candle, but short the red candle. So it is something to consider. I know you are knife catching, and it is a decent enough place to knife catch, because I know what you're trying to do, and sometimes this will reject in and around this area. And like, look here at the big red candle. That's where it rejected at before. There'll be sellers in here, and that could sell the price. And if we do get a sell off, your target could be down here in the middle of this candle. So it is interesting. How is the market going to react in the weekend? Ethereum's very strong today. There is news of FTX opening again. So there's a few things to consider, and there's a few bullish environments, bullish narratives at the moment, and sometimes those narratives can be hard to fight. And I only say that just so you be careful. This is a 3-day candle, by the way. I don't know if I mentioned that. Yeah. So yeah, exactly. So that's exactly, you're trying to knife catch, and that is probably as good as you could get really at the moment into the red 200 bullish stop hunt. Yeah. So it's where below the white line is bearish near term, and above it, if we get above it again, well, that's bullish, and we're going to rip through the red 200. So yeah, I think you kind of have to play it by ear. You could even have your stop loss now right there at the highs. Now, if you do see me quite a lot, and I say I like to see a pierce of the red 200. We did not pierce the red 200 yet, so that is interesting. We didn't. It got front ran probably because we had this sell off yesterday, slight rejection yesterday, and now there is sellers in this area. So I would hold it for now, and I would keep the opinion of bearish below this white line, bearish below that stop hunt, and bullish above it. If we start to push through that white line, it's probably time to get out again, because there's probably going to be another day to the upside. But I see what you mean. This is 4 days in a row. Sorry, 1, 2, 3, 4, 5, 6 days in a row if you count the bottom two. And all you need is a small drop to make money. You can see here there's 3 days, 5 days, 6, 7, 8 green days in a row. But and there wasn't much downside. When the market is strong, you don't get much drop. So you got to be careful. Look at the move up. You get very small drop before going higher again. And what if we're in the process of doing something similar? So I'm just saying, just to be careful. But all in all, like, like what I'm trying to get at as well is this. What if this bullish move gets a second green week to the upside? That would likely mean that the downside here is limited. Okay, it is a strong week. It's a bull flag type pattern. Sometimes you get 2 weeks to the upside, and the target there, you know, would be pushing up above here to new highs somewhere up there. That would be the target if this is going to try and run. So it does look like the downside is limited at the moment. Can there be a small drop? Yes, it does look like there can be. Like here's a good example actually, and here's a great example actually. So you can see here, this is a rounding pattern. See this rounding pattern when you zoom in there? Now, if you see here, look at this rounding pattern. When you get the move up, there's not much downside here on the wick, and it goes higher. And then there's not much downside again, it goes higher. Let's go and look at that actually. Let's look at the daily on that. Well, we can see right here, you know, there's only one red day. One red day, pump. One red day, pump. One red day, pump. Okay, so you can take the same principle because like even here, there's one red day, and then, well, there's a bit of a bottoming candle, and then it pumps. But you can take the same principle here in a strong market. This is a strong market. Look at this. So if you get one red day to the downside, it may be time to start looking to take some profits. A little bit like here, you get one red down day, and it's some profits. One red down day down into that area, profits, and then move higher. So yeah, that's just some thoughts on it. For now, it looks good. I like your idea for a small drop, and you know, see where it goes. If it gets above the white line, it's time to get out of it.